Hello, this is Mark Dombrowski, enrolled agent with True Resolve Tax Professionals. Today we'll be talking about the IRS Offering Compromise Form 656. Please understand that this form, the 656, is just the application for an offering compromise. The implications of the other supporting form, the 433A OIC, are far-reaching. In other words, what we're going to do today is just the offering compromise application form. How to calculate what your offering compromise should be is in the 433A OIC form production. So when you put the offer together, you start with that 433A OIC, and then we get our way to the 656 offering compromise form. Okay, here we are with the offering compromise form 656. Make sure you're using the most recent version, which is April of 2020. The first thing here you're going to see is the pre-qualifier tool. This thing is you can use if you want. What it does is for someone like yourself who's a do-it-yourselfer, and you're not using a professional like me to do your offering compromise, you want to use the pre-qualifier tool simply to weed out when you're not going to be able to successfully do an offering compromise. Let me put it to you basically. The IRS wants to be paid in full no matter what. This isn't an amnesty program. This isn't the Fresh Start program that everyone's talking about. Yes, there's a Fresh Start part of offering compromise, but that's so used horribly by advertisers, and it's deceitful. If you can pay the IRS, you're not an offering compromise candidate. Let me say that again. If you can full pay the IRS from the disposal value of your assets, as well as making payments every month, then you're not an offering compromise candidate. If you owe the IRS 25 grand and you've got $800,000 in your 401k, you are not an offering compromise candidate. If you're 40 years old and you owe the IRS 20 grand and you've got $300,000 of equity in your home, you're not an offering compromise candidate. This program is only for people who, no matter what the IRS does to them, they will never get the amount owed. Let's get into the form. There's a new $205 application fee that's right at the top. That would be going in with this offering compromise. It's this form, the check for $205, and then there's different other checks for a deposit if you're going to be making a monthly payment to the IRS, which is a different kind of offer, or a lump sum offer. We'll look at that briefly. On the form, you're going to want to make sure you clearly identify each taxpayer, spouse and spouse, as well as their social security numbers and current address. Obviously, it's very important that you identify the taxpayer, full 9-digit social security numbers for spouse and spouse. I just looked at an offering compromise that was sent to me from a colleague, and the social security number was only 8 digits long, and they were wondering why the IRS returned the offer. Okay. Type of taxes you got here, you're going to do 1040. We're going to say, I don't know, I'm just going to say 16, 15, 16, 17 is what the taxpayer owes. Trust fund recovery penalty is a very unique thing. If you owned an LLC or a corporation and failed to pay withholding taxes, that's what the trust fund recovery penalty is. Believe me, you know it if you got it. There's a full investigation of that, and it's very it's a very tough thing to undergo. If you're an employer, you might have 941s, 940s. Those are for self-employed people who have employees. Okay, now page 2. You're looking at this chart to see whether or not, based on your family size, you qualify for not having to pay over the $205 and the initial fee. It comes down to per month, how much money, per year, how much money you earn, and the size of your family. You can fill this in on your own. If you're a corporation, you really shouldn't be doing this on your own, but this is the part you'd fill in for business taxes. Reason for your offer. Most offers are done on what is called doubt as to collectability. That is, I cannot pay from assets and my ability to pay every month. Special circumstances, effective tax administration offers, an ETA, means roughly you have the assets to pay, but you feel as though you still shouldn't pay. Here's what ETA is meant for. A little old lady whose husband was a doctor who failed to pay IRS taxes. She stayed at home. She didn't have anything to do with his practice. He racked up all these taxes. He has passed away, and there's equity in her house to full pay. They are not kicking an old lady out on the street at the IRS. They're not going to seize her house. So even though she could full pay from the asset, and that's an important distinction, not just from her ability to pay every month, but solely because of her ability to pay from an asset, then the IRS might consider an effective tax administration. Now, explanation of circumstances, you can put anything, you can put your whole story, you can say see attached, put in a letter about how you racked up the taxes and such. But in the end, the reason you owe the taxes is not going to be the reason the IRS accepts your offer. The reason the IRS accepts your offer is because you cannot pay them, period. Not because of a horrible situation. You could have had a horrible situation happen to you that helped you rack up the taxes. It might help you under special circumstances. It doesn't hurt to say it. But again, if the client can full pay and all those horrible things are over and you're back now and your current income and current assets could full pay the IRS, you may not be an offering compromise candidate. Payment terms. This is where you're going to figure out with the IRS what you're going to do. Are you going to do a lump sum offer, which is the spirit of an offering compromise? That's where you're looking at, I'm going to pay 20% of the offered amount down and the rest of it over 5 months. You can see it here. Okay. So say we wanted to offer 10 grand because that's what we calculated using the 433A OIC. We calculated that you could pay $10,000. Total offer amount, $10,000. Initial payment is going to be $2,000. Actually didn't need that little thing. Remaining balance is $8,000. And how are we going to pay that? Are we going to pay nothing here and then just pay $8,000 after 5 months? Whether you want to do 2, 4, 6, 8 here, whatever you want to do. But by the 5th month, after you get an acceptance letter from the IRS, and this process takes many, many months, you could be sitting in an offer for 7, 8 to 10 months to a year. That's basically based on backlog and how long other people are ahead of you. It's first in, first out. If you're going to pay it over 24 months, amount of your offer is still going to be 10 grand. Then, whoops, not that many. And basically, the first payment would be, I throw out a number, what you can pay, $500 a month, which is included the offer, and then $500 a month will be sent in on the 21st day of the month and you take $10,000, but it has to be within 24 months. So I'd say 23 months. And then the final is whatever the balance is going to be of 10 grand. So if you're paying this $500 a month, pays off 6 grand every year. So my math is a little off, but basically you want to have these numbers so that the full payment is made. You could say, I'm going to pay you $100 a month with the offer and $100 here. You paid $2,400, you paid $2,300, and the balance of the 23 of the 7,000 is here. That's how you could do things. Would be paid on the 21st of the the 24th month. Okay, it's confusing. I don't like periodic payment offers because they fly in the face of what you're doing. When I say fly in the face this is the spirit of an offering compromise. Dear IRS, I can't pay you. I can pay you this much, and I'm going to pay it to you over 5 months. Not to say that I haven't had successful 24-month payment plan offering compromises. It's just, it drags things out. And the more you drag things out with this offering compromise with a client, the worse it is. Don't get hung up on designated payment. That's only if you're going to be paying, say, the $10,000. Not to get too confusing, but again, that's why you hire a professional like me to do these offers for you. But if you're making a $10,000 offer and you're paying that 20% down, that 20% you cannot designate. You don't use this section 5 at all. You're going to only say if you paid all 10 grand at once and 8,000 of it, you have the ability to designate. Again, it's a complicated form. That's why, I do these all the time. If you want to use electronic funds transfer system, you can. I generally write a check so I can track it with the client. And the source of funds, you're going to say, from family, wherever it is. They're just trying to trick you here so that you say, oh, I'm going to get it from my the trust that I didn't tell you guys about on the form 433A. I'm going to borrow the money from the trust. And so they basically trick you at this point. They do just want to know where you're getting it from. Now, the next section is very important because it makes you think about what's going on in this offer. I have filed all required tax returns. Or I had a client right now who I'm telling him, don't get into an offer, but you'd say, listen, for 14, 15, and 16, I was homeless, destitute. I was only on Social Security disability. I had no filing requirement, whatever it might be. I filed all the returns, and I was not required to file 14, 15, 16. And then the second part, I have made all estimated payments, or I'm not required to make estimated payments. Estimated payments are made by individuals who are self-employed, people who have maybe large dividends that they have to make estimated payments. If you are a regular wage earner, your withholding is essentially your estimated payments. So page 5 is something that if you are doing an offer, you must read. This is from me to you. That's why you're watching the video. Read these things. Read this stuff, okay? This is important, okay? There's stuff in here like they tell you they keep your refund for all the time you're in the offer plus the year they accept it. Okay, so if you put an offer in 1998 in January and it takes them a whole year to do it and they don't accept it till January 1999, they take your 1998 refund and your 1999 refund that you don't file until April 15th of 2000. So it's important that you lose your refunds and you cannot apply those refunds towards your 20% deposit. Also in here, they tell you that for 5 years, you have to be a good boy. When you get an accepted offer, for the 5 years after your offer is accepted, you have to file and pay your taxes or your default your offer as if it never happened. That is why it is so important that you should not do an offer until all your ducks are in a row, until all of the problems that got you here are off the table. If you cannot pay your estimated payments, you're self-employed plumber, an electrician, a doctor, financial planner, and you can't pay your estimated payments, don't do an offer in compromise because it's just going to default anyways. Plus, they won't process your offer if they see you're not making estimated payments. So those are the two biggest things, but you read through this entire thing. This is important. I teach this class. I teach a 2-hour class, a 3-hour class, a 4-hour class on offering compromises all across the country to other tax professionals. And I explain to them, even if they do only one offer, and this is a tax professional, read these 2 pages. You're going to be signing it. You're going to check this box to say that you authorize the IRS to leave a voicemail for you. It sounds silly, but they're not allowed for disclosure purposes to leave messages on answering machines. I don't know how many people actually have an answering machine, but they're talking about voicemail, whether it's a cell phone voicemail, office voicemail, whatever it is. Check the box so that the person can leave you a detailed message on your voicemail. And then this is if, when you'd hire someone like me, we'd be filling in our official designations in here. So that is the form. Thank you for listening to me. And if you have any questions, you can reach me at True Resolve Tax Professionals. That is 720-319-8954. Again, 720-319-8954. Or my email, which is my name, Mark with a C, M-A-R-C, Mark Dombrowski, EA at gmail.com. MARCDOMBROWSKI, EA at Gmail. Thank you.